to say you simply flooded the system with money?
Yes, we did. That's another way to think about it. We did.
Where does it come from? Do you just print it?
We print it digitally, and we do that by buying treasury bills. That actually increases the money supply.
Financial Turmoil Explained.
Good morning, ladies and gentlemen, and welcome to the show on this 22nd Tuesday, I should say, the 22nd of March, 2022. Thank you for tuning in. Glad to have you guys here. The Fed, they're going to create, they are going to bring down the economy. This is basically their idea of how to fight inflation, is to basically stop the economy. But that's not going to stop inflation because they're so far behind the curve. Let's get started. Let's open up the charts right here. Goldman now sees the Fed hiking 50 basis points in May and in June for the first time since 1994. So they're going to start hiking it a whole half of a point each time. So that's a whole point in May and June. So they're going to get the interest rates up there on the short end of the yield curve, and the interest rates on the long end are already rising. So this points toward an effect that's coming. It's going to make things like mortgages, they're going to go way up in price. The housing market's going to drop off considerably, and the economy as well is going to cool down rather rapidly at a certain point if they continue with this. So what does that mean? It means inflation's going to continue, but with a stagnant economy, with an economy that has been sufficiently weakened by the Fed. This is the worst of all worlds that you can get, and it's going to start to really cut. As the inflation increases, it's going to start, and food prices start to go up, it's going to start to really cut into not the rich people, but to the people that don't have a lot of money, or not making a lot of money, or not in this money pool. They're going to start really struggling to feed themselves at a certain point. And I'm not talking a long time from now either. I'm talking that this could all happen within this year and early next year. People are, at a certain point, people are just not going to take this. They're not going to accept this. I'm expecting a Fed reversal at a certain point. I'm expecting them to go back to monetary policy to try to fix what they're going to create. They're creating a problem, and then they're going to have the answer to try to fix it, which is going to be to even more money creation. This is not going to end pretty. It's not going to be pretty. Meanwhile, we got a war over there, and it's moving into sort of a stalemate sort of a thing right now. That's where it's been going the last number of days. Let's get in there and take a look at silver price today. We're looking at down 52 cents. Now, this is just an absolute right in our face smackdown of the silver price. That's big. 52-cent drop at 24.68 for silver today. This shows that these bankers are still using their power to smack the price of silver down. Let's take a look at gold today. See what it's doing. Gold. 1912, and it's going straight down right now. It's down $23.70 today so far. It's amazing how that they can control the price of the metals while other things are going up at amazing speed and price, other commodities and things. But take a look at nickel, for instance, for crying out loud, the price of nickel. But no, not silver and gold, So if the price of everything else is going up, and if they keep pushing the price of gold and silver down, I mean, heck, why build your engine blocks for these car manufacturers out of iron? build them out of silver, or even gold. It's going to be cheaper than everything else. See, something's wrong here. Something doesn't quite fit in what they're doing here, and something's going to break. And that's the way with all these other markets too. Something's going to break. Let's take a look at crypto. Crypto's 1932. It's taken a little boost to the upside. I told you that the long bear market in cryptocurrency that saw it drop by half is approaching its end. We're still though at $42,755 for a Bitcoin. That's what we're sitting at today. Let's take a look now at the Dow Jones Industrial Average. And it's up 230 points on the day at 34,796. Actually, 243 points up for the Dow. Let's take a look now at crude oil. And it's down $1.39 at $110.73. There's going to be an awful lot of drilling starting up. Now that we got the crude price so high, it's going to make it profitable. There's a lot of oil that was a very tight profit margin for oil there when the oil price was down. Heck, the oil price was negative $40 for a while there. There's no profit margin when they were giving it away. Basically, if you had an empty tanker, there was a couple days there. If you had an empty tanker, they'd pay you to fill it. Boy, how things have changed. Now there's a profit margin to be made, and even for some of these oil finds where the oil is rather deep and hard to get to, now there's a profit margin. Now they'll go after it because there's a profit margin. So the cure for the high oil price is a high oil price. It's the cure for it. I mean, it cures itself because that's when more oil will be produced when the price starts to go up again, makes a profit margin, and they'll go out and they'll find new oil because there's new oil out there. It's just that they got to be paid enough to dig for it. Let's take a look now at the MOVE index at 101.94. It's up today. It's up just a little bit. And this means that there's a little bit more instability in the credit markets. Let's take a look now at the bonds and rates today, and this is getting a little bit out of control. It's getting up, like the U.S. 10 years now crossed that boundary at 2.25. It's at 2.38. That's past the line. I said 2.25. So anything can happen when you start to get the bonds start to get out of control, because this U.S. 10 years, what most all debt is priced on, and it's running at 2.38 now and climbing. It's up 6.9 basis points today. The U.S. 30 years at 2.6, and it's climbing. Now, this is going to have an impact on the economy, because when you start to raise the price of money, basically, which is the debt market here, when you start to raise that up, raise that bar higher and higher, well, it chokes off the creation of new credit. It just chokes it off. And this whole economy runs on oil and credit. It's an oil-based economy, but it runs on credit. That's what it runs on. It's a credit-based economy. And so this should be a no-brainer for anybody out there. When you see the cost of money starting to go up, it's going to choke off the available money in the system or liquidity. And at a certain point, it'll wreck the system. This bond market is what will wreck the system. This is a wrecking ball. And the wrecking ball is starting to swing. And the system is the building. So you hear the big tractor start, and he starts to swing the wrecking ball. You know it soon the economy's going to start to come down. And they're going to raise it. They're talking about 50 basis points, raising it 50 and then 50 more and on and on and on. They don't have a clue. They don't have a clue, and this is why this whole economy is set up the way it is as a Ponzi scheme. They don't know how real money works and how real money's supposed to function. We're living in an illusionary monetary system where it's all smoke and mirrors. The only real money out there is gold and silver. But, they've left that behind in 1971. They're going to wreck everything. They're going to destroy the free world because they're going to destroy the free world's monetary system. I mean, it's just a total mess. You can't run a system on credit forever. It just grows bigger and bigger until a certain point it just has to break. And we're approaching that point, the breaking point of it all. They know they're trapped. They know the whole thing's going to break. But they're trying to stem off this hyperinflation by tightening, and they're only going to swing things too far in the opposite direction and then have to swing things back again because they see the system start to crack apart. Total mess. So anyway, listen, guys, let's take a look at the dollar index. That's the last thing we're going to look at today, and it's going along sideways today. Yeah, the dollar is going to stay strong as long as they continue to tighten, But the thing is the dollar's being compared against a basket of other fiat currencies that are all basically worthless as well. They're not really based on anything. They can create as many of them as they want. That's the biggest flaw in the fiat currencies, is that they're all created from credit. And credit is debt. And debt is owed in the end. And it's like somebody living off their credit cards. It just doesn't work that way. It might work for a while, but in the end, what it does is it just pinches down until it ruins everything. And we're heading toward that point now. And what it's ultimately going to yield in the end, because none of them have the political will to even remotely do anything like what Paul Volcker did back in the 1970s, None of them have the political will to do anything like that. And so when the rubber hits the road, you're going to find that they're going to go back to more looser monetary policy by increasing credit again. They're going to increase credit again. And this is the final straw. The dollar is going to, and all the other fiat currencies are going to go down with it. All the Western fiat currencies, Don't know what's going to happen exactly in the East. But they're connected to the financial system of the world as well. And so, even if they decide to take all their cards off the table and go over there and play the game by themselves, still what'll happen is they're going to find that they're isolated, and they could in effect possibly be insulated from a certain amount of the damage that the Western world's going to have when the Western world collapses and crumbles. That's what it is. It's a collapse of an empire, a massive empire, just like the collapse of the Roman Empire a long time ago. Thank you guys for listening. Like and subscribe, and we'll catch you guys in the next show. Bye-bye.